Hello, friends, and welcome to today's webinar. I am Bhavin Jain. I am a chartered accountant by profession, and I lead the customer acquisition and experience initiative for Bondbazaar.com, your one-stop bazaar for bond investments. So, in today's webinar, we are going to look at the fixed income space in India and maybe take some perspective on what more could be done in this space or how, as retail customers, we can maximize our benefits by investing in this fixed income space. When we talk about fixed income space, it is the space where the returns are fixed, which means that there is no risk and there is no downside, which typically comes with equity or other market linked investments. We'll wait for a few more people to join and we'll begin in another 2 minutes, please. So thank you once again all for joining. We'll just begin this short webinar. So let's just take a pause and look at the space which is available for all of us to invest. We have equity, which can be done through direct equity investments through in the markets, as well as equity mutual funds. We have the fixed income space, where we can contribute our savings and earn fixed returns on our savings and investments. We have gold and silver, which is also an emotional attachment for us as Indians. And we have real estate, which is again an investment come an emotional attachment or emotional decision for us. So at this point, we would like to focus on equity and fixed income space, considering that they are the spaces where we typically invest considering returns in mind. Gold and silver, as well as real estate, being emotional decisions as well as safety related decisions for us, they are quasi return making instrument for us and more of a safety instrument for us. So let's take a small poll. Within equity or fixed income space, what do you think is more popular? Where do you think us as retail investors or we as retail investors like more or invest more in? So you have a poll coming up. Once you have filled in your responses, then we can see the results. The audience can maybe tell us what do they think is more popular as an investment by commenting in the chat box. So there's one which says FD. I have 2:1 in equity versus FD. So we have a 2-all on equity now. This is getting interesting. So there seems to be a larger consensus or opinion towards equity. So let's look at it in numbers. The equity market cap today of all listed securities or listed equity shares today has crossed around 300 lakh crore, of which around 10 to 15% is owned by equity investors. So in terms of ballpark numbers, we can say around 40 to 45 lakh crore is held by retail equity investors in the equity share market. Now, as compared to that, if we just look at our bank balances, which is bank fixed deposits as well as bank saving deposits, the number is around 100 lakh crore. And that is just our bank deposits. If we add our provident fund or mutual funds or retail investment in other fixed income instruments, then it will probably multiply. Of course, equity brings in with itself the thrill as well as the volatility in returns, which is exciting to some. An average Indian, as we may think of, is probably more aligned towards fixed income instruments. We may also do a small test in our own bank accounts to see what kind of monies typically lie in our savings bank account or in our recurring or direct FDs or linked FDs. And the number will probably might surprise us as well. So let's study this fixed income space, which is probably the most popular investment avenue for us as Indians. So this is probably this comes naturally to us and it's a no-brainer for us. The bank fixed deposits or government saving schemes, returns are fixed. Of course, we believe in the high safety element of these investments. And we know that our money, the return of our monies, including interest, is guaranteed by RBI up to 5 lakh rupees. And we believe in our banking system to return the money. So yes, it is safe as well as the returns are fixed. However, bank FDs typically give a return of 6 to 7% or slightly more if you go to a smaller bank. Thus, they come in with a prepayment penalty or a withdrawal penalty should we try to close the FDs prematurely. So we have to be very, very sure at the time of our investment that the horizons or the time frame. And if we try to withdraw early, we'll lose a large portion of our interest income. To resolve this issue of premature withdrawals, we got another instrument called the debt mutual funds. It is here, there is a professional mutual fund or fund manager who takes or collects the monies from us and invests in government or corporate bonds. So if in effect, we are having a intermediary invest on our behalf. You can invest small amounts as well as you can withdraw your funds anytime. Here also probably the problem was not resolved. The historical returns have been in the 6 to 7%, slightly more range. Now there is an AMC charge or a distribution charge, which is attached to a mutual fund, which can sometimes affect its return more than, and the returns can actually go lower than a bank FD as well. Hence, over a longer period, this investment has been deemed inefficient for investors who are looking for medium to long-term investments. So what can be the solution to this fixed income conundrum for us? How do us as retail investors maximize the returns from our savings in an efficient as well as safe manner? Now let's look at the option for which we probably hired debt mutual funds or advisors. We can directly invest in bonds now. Now there are two types of bonds, government bonds as well as corporate bonds. Bonds are effectively nothing but loan to an institution. That institution can be a government, that institution can be a corporate. And when we say corporate, it includes our SBI, it includes our HDFC Bank, it includes our Reliance Industries, it includes Tata Group companies as well. It also includes our PSU institutions, public sector undertaking institutions, who regularly borrow monies from banks or us investors for their various functions. The good part about bonds is the interest rate is fixed. So from the date of issuance of the bond, the interest income is fixed, which gives us the comfort of an FD. Also, the terms as well as maturities are fixed. So we have absolute clarity on the date of our investment. And bonds is not a new product. It's an age-old product. And I'm sure some of our forefathers would have invested in a lot of government and public sector bonds in the past. However, there is a new way to deal in bonds, which is what we are going to come to. So these are some of the new age features which are important to understand bonds better. Today, unlike the past, we are not dealing in paper bonds. Means the purchase of a bond is not in form of a physical paper. They are listed on BSE and NSE, the same place where our equity shares get listed and are available for trading. Because they are listed on BSE and NSE, we can actually buy from BSE and NSE, and we can also sell whenever required through BSE and NSE platforms. Hence, they can be bought and sold in the secondary market. We can invest at any time. We can invest in form of a bond IPO. We can also invest from the open market through the medium of BSE and NSE. Because bonds are market linked, they earn slightly more interest than FDs. Typically, the returns from bonds can be between 8 to 11%. So thus, where the returns from FD stops, the return from bonds start, which gives us the advantage of 3 to 5% over a traditional FD. There is also no minimum cap on the amount to be invested. We can start very small to try and test it. Government bonds typically come with face value of rupees 100. Corporate bonds typically come with face value of 1000. Because they can be purchased through our demat accounts, just like equities, anybody can invest. Anybody can open a demat account and anybody can invest. So the larger question for us as retail investors is, do we want an intermediary or can we do direct? The world is moving towards direct and removal of some of the inefficiencies in the markets. And so is bondbazaar.com, which is what we are going to experience in a few minutes. To summarize, bonds are similar to fixed deposits. They represent a loan to a government or corporate. They are secured in form of assets. They are in demat format and hence transferable or tradable on BSE and NSE. The interest rates can typically range from 8 to 11, 12%, and they are tradable. Vis-a-vis bank FDs, which are highly secured, but they are not tradable and typically offer returns between anything between 5 to 7%. Giriji, I'll try to be a little louder for you. So now let's experience the Bondbazaar platform and let us share the new age way of investing in bonds to maximize our safety as well as flexibility and returns. Can we please have the Bondbazaar portal showed on the screen? So as we said or discussed, you can now through the medium of bondbazaar.com open your accounts and experience live trading as well as investment in all kind of bonds through the comfort of BSE and NSE. It is a unique platform because now it is very, very transparent as well as easy. And you have access to all kind of bonds on BSE and NSE. So this is the terminal screen which one reaches out once he logs in. On the right hand side, we have two tabs, NSE and next to it is BSE. Under NSE and BSE, we have distribution of bonds in GSEC, which is Government of India bonds. Next to it is corporate bonds. We can click on them to reach corporate bonds. Once we click on that, we arrive at the window of corporate bonds where we can see all the bonds available on the exchange. Similarly, we can reach out to or we can see sovereign gold bonds denoted by the acronym SGB. Now, let's study some of the features of this portal to understand it better. Through the medium of this portal, we can study any bond through its information. Can we please click on, let's say, an India Grid Trust? So if you find any bond worth visiting or interested in any bond, you can study its information through this portal, and all the relevant information will be available through the portal itself. Our database consists of all the live bonds in India, which are listed on BSE and NSE, and they number around 15,000 plus bonds, with new bonds getting added to this list every day. So if we have to study this bond, it says it has all the relevant information for an investment decision to be made. For example, the coupon rate is 8.2%, face value is 1,000 rupees, the interest payment is annually, date of maturity is mentioned as 6th May 2031. In addition, if you want to dig a little deeper, we can also download the rating rationale, which explains why it is AAA rated, or it explains the decision, the credit quality of this particular bond, as well as the IPO prospectus of that bond. So here we have the rating rationale on our screens, which affirms the credit quality or which details the credit quality of the bond. Now let's say we like this bond. So we can simply go to buy, and as we can see, a window opens which explains what are the offers as well as the bid. Offer is the amount, the quote available for us to buy this bond. It is currently showing as 0 because we are past the market hours and we are just seeing the last rated position in the exchange. Hence, there are no live offers for this particular bond because the exchange closes at 3:30 p.m. But on a live, in a live market on any given day, we can place our bid based on the offers available. And interestingly, the platform allows us to place our bids in form of the expected return. The yield column is currently showing as 8.14, denoting that we would be buying this bond at an interest rate of 8.14%. We could probably also change it to a 8.2 or a 8.3, and the total price mentioned below will change accordingly. This yield-based trading ensures that we know what returns we are going to get from our investment. Once we click on buy now, the bond will get added to our order will get placed, and once it matches the sell price, the bond will come to our demat account and become part of our portfolio. We can go back to the terminal, please. Please go to the corporate bond section. So in the beginning, it is showing some bonds at 5.14%. They are the tax-free bonds. If we go a little down, we see a lot of other corporate bonds, the regular corporate bonds which are not tax-free, and we can see the variety which is available. For example, at this point on our screens, we have IIFL Finance, we have National Highway Authority of India, we have REC as well as PFC, we have Edelweiss Housing, we have NABARD, HUDCO. Go down, please. Can you go to the next page? Next page. So we have a plethora of tax-free bonds on this page. Let's go to the fifth page. Since around 5,000 bonds are getting traded actively in the market, we typically see quotes on at least 300 to 400 bonds every day, giving us a wide range of choices. So a lot of large entities like L&T, Mahindra and Mahindra, Piramal, Tata, Aditya Birla, for example, large NBFCs like PFC, REC, IIFCL, their bonds are regularly available on the exchange. Because they are available on the exchange, you can see buy as well as sell quotes, and you can either buy the bond, or if you want to exit a bond during its lifetime, you may also exit the bond by placing your own sell quote. That function gives us, as the retail investors, the flexibility to buy at any point of time as well as sell at any point of time and earn the interest for our hold period. This way, we can avoid any withdrawal penalties or prepayment penalties associated with FDs and maximize our returns. First, by investing in a good quality corporate bond at a higher yield or return, and then sell it without the worrying about the prepayment penalties or withdrawal penalties. The functionality of this portal is similar to an exchange, where if we want to invest, we can open our account, we can reach the terminal. If we like a bond, we can add funds and place our own buy order or sell order. And accordingly, either the securities will get credited to our account or the securities will be debited to our account, all through the comfort of BSE, NSE and CDSL, the securities depository. So through this, we can add funds by debiting or by transferring funds from our demat linked account, and the options available are through net banking or through UPI. Go back to the terminal, please. So we can now take up questions and discuss if participants have any views. You can now unmute yourself and we can discuss. So Himanji, bonds, the interest from bonds will be taxable at the slab rates. If you fall within the taxation is similar to interest on your bank FDs. Of course, there are tax-free bonds available. So if you invest in tax-free bonds, then the interest will become tax-free. Yes, if there is a capital gain on the bond, then it will go into short-term or long-term capital gain, depending on your hold period. And capital gain will be vis-a-vis the purchase price, clean purchase price versus the clean sale price without any accrued interest. You can unmute yourself to ask any questions.
Yeah, I can unmute myself.
You can now click on unmute to unmute yourself.
Just want to check on the liquidity of bonds which are at a lower spectrum of rating, say a AA plus or AA, and which are not PSU or government bonds. Hello, can you hear me? Hello?
Yes.
Yeah, I was asking that I wanted to check on the liquidity of the bonds which are on the lower spectrum of rating, say AA or AA plus, which are not PSU or government bonds. So how is liquidity if somebody wants to sell it before, say, maturity? So how is the liquidity basically, on the corporate side?
Uh, so a lot of corporate bonds actively get traded on the exchange. So if I have to share some examples, uh, the Piramal Capital Retail Bond is getting traded on the exchange on a daily basis. So is let's say an IIFL Finance, a Shriram Transport, in some bits a little Mahindra and Mahindra. So one can look at liquidity at the time of buying as well through the market depth. Can we just show the page again? Visit corporate bonds, please. So as you can see towards the right, top right of your screen, uh, today, this is the last saved position of today, where around buy orders were there for around 4,700 crores and sell orders were there for around 3,300 crores. And this is just NSE. Similar numbers are available on BSE as well. So BSE had around 900 bonds being bought, uh, valued at around 4,400 crores. Also, you can see that the red represent the quotes in red represents the sell quotes, yani buy quotes for consumer, and blue quotes represent the sell quote for consumer. So we as investors can buy GSEC of 2027 at 102 rupees, or we can sell it at 101.9. Also notice that the spread differential in most of the bonds is pretty low, meaning that sellers and buyers are almost at each other's prices, indicating robustness of the exchange platform. Since you are through this BSE and NSE platform, you are making available inventory as well as purchasing inventory from the whole of India who is having access to this same exchange. The competition will ensure that the prices are fair and reasonable, and any good bond for which an offer is being placed uh, gets sold. Hemanji, I hope I
Okay.
am answering your
Yeah.
question.
Yeah. Thank you so much.
So to experience this better, we are going to host a lot of such webinars, as well as our customers can experience this in live market and reach out to my team as well as experts team, bond experts team within Bondbazaar to know more. Thank you very much. With this, we conclude today's session. We'll bring lots of such sessions covering variety of topics in the bond segment. We hope you found it useful and look forward to our interaction the next time over. Thank you so much.
Thank you, Bhavin. Thank you.